Welcome, fellow curious mind. It's really great to have you with us today for this deep dive. Our mission is to step into the ring and unpack the ultimate heavyweight championship of the AI era. We're looking at AMD versus NVIDIA.
Yeah, it's the defining rivalry in tech right now.
It really is. And to do this, we're pulling from a massive stack of sources today. We've got hot off the press Q4 2025 earnings call transcripts from both of these companies. We're looking at deep dive financial analyses from Motley Fool and Zacks.
We've got the hardware covered too.
Right, yeah. The nitty-gritty tech specs from Extreme Tech and Intuition Labs. And to tie all those broader implications together, we're looking at a comprehensive AI ethics and policy report from the ACM.
It's a lot of reading, but it's entirely necessary. Because to really understand this rivalry, you have to look at it from multiple angles. We've moved, way past the point where this is just about who physically manufactures the fastest silicon chip.
Yeah.
It's a battle of ecosystems, economics, and honestly, global infrastructure.
So the central questions we're going to explore with you today are pretty straightforward, but incredibly complex to answer. Which company actually offers better value for investors today? Which one has the better outlook? And critically, how are geopolitics and our own physical energy grids shaping their battleground?
Huge questions.
Okay, let's unpack this. Let's start with the tail of the tape, the financials and market share. Looking at AMD's numbers from their Q4 2025 earnings call, they had a record-breaking quarter.
They did.
They hit $10.3 billion in revenue, which is up 34% year over year. Full-year revenue reached $34.6 billion. And if you zoom in just on their data center segment...
Which is where the AI hardware lives?
Exactly. That segment jumped 39% to $5.4 billion.
Those are undeniably robust numbers from AMD. I mean, they're growing at a clip most companies would envy.
Right.
But to really grasp the dynamics of this market, we had to put those numbers next to the sheer jaw-dropping scale of NVIDIA.
Right.
NVIDIA's fiscal year 2025 revenue was $130.5 billion.
Which is up 114%, just for context.
Yeah, up 114%. And they are guiding for a jaw-dropping $78 billion in the first quarter of fiscal 2026 alone.
$78 billion in a single quarter. It's genuinely hard to even conceptualize that kind of scale.
It really is.
But there's another stat in these reports that caught my eye, and that's the gross margin gap. NVIDIA is operating at a staggering 73% to 75% gross margin. Meanwhile, AMD is sitting down around 54% to 57%. So why is there such a massive gulf when they're essentially building similar hardware?
What's fascinating here is that this margin gap isn't just a story about manufacturing efficiency. It's fundamentally a story about pricing power, revenue mix, and sheer market dominance.
Right.
When a company has a near monopoly, they get to dictate the terms. Analysts estimate that NVIDIA controls somewhere between 86% and 92% of the data center GPU market.
And AMD is at what, 7%?
Around 7%, exactly.
Yeah.
NVIDIA commands a premium because, for the vast majority of buyers over the last few years, there simply hasn't been a viable alternative that works out of the box. But that 7% held by AMD is exactly why this rivalry is heating up. They're aggressively maneuvering to steal that massive market share.
And that brings up the question of how NVIDIA got that 90+% market share in the first place. I see a lot of talk in the sources about moats. It's not just that their chips are faster, it's the software that locks customers in.
Precisely. NVIDIA's true competitive advantage is their CUDA software ecosystem. Think of CUDA like a programming language that NVIDIA spent over a decade teaching the entire AI industry to speak.
Oh, everyone just defaults to it.
Exactly. Every major machine learning framework targets NVIDIA exclusively. So a massive network effect took hold. Developers learn on CUDA, they build their tools on it, the open source community relies on it. If a company wants to switch hardware providers, they face astronomical switching costs.
So they basically have to rewrite their entire infrastructure.
Yeah, which no one wants to do.
So it's the ultimate ecosystem lock-in. But NVIDIA isn't just coasting on software either. Reading through the Intuition Lab specs, their hardware cadence is relentless. They're shipping the Blackwell architecture now, but they're already detailing the upcoming Vera Rubin platform for the second half of 2026.
Which is a beast of a system.
Yeah, the specs mention 288 gigabytes of HBM4 memory and 13 terabytes per second of bandwidth. What does that actually mean for the industry?
Basically, HBM stands for high bandwidth memory. In AI processing, the bottleneck usually isn't the core itself, it's how fast you can feed data into that core. It's like having a supercar engine, but a fuel line the size of a drinking straw.
Okay, that makes sense.
HBM4 upgrades that straw to a massive industrial pipeline. Data moves at 13 terabytes per second. They're pushing the absolute physical limits of silicon.
But AMD is certainly pushing back. Their hardware arsenal is impressive. The MI350 accelerator is ramping up, and the MI400 is slated for the second half of 2026. Plus, they're releasing the 256-core EPYC Venice CPU built on TSMC's 2-nanometer node.
That 2-nanometer node is crucial for energy efficiency.
It is. And to understand AMD's playbook, you just have to look at what they did in the server CPU market. Back in 2017, AMD had 0% of that market. Today, they hold nearly 40%. They know how to play the long game.
They absolutely do, iterating until the incumbent stumbles.
And they're changing how they sell systems now? The sources talk about the new Helios rack?
Right. AMD realized customers don't want puzzle pieces, they want the finished picture.
Oh.
The Helios rack-scale platform was designed jointly with Meta. It connects up to 72 GPUs together.
To reduce optimization times.
Exactly. It drastically cuts the time it takes customers to get their workloads running.
Okay, here's where it gets really interesting. AMD is realizing they can't just fight NVIDIA developer by developer. They are partnering directly with the hyperscalers. They announced a binding agreement with Meta for an initial 1 gigawatt of Instinct chip deployment with a pathway to 6 gigawatts.
Gigawatts. It's hard to even fathom that scale.
And there's a 6 gigawatt deployment agreement with OpenAI expected to contribute over $100 billion in revenue over the next few years.
Those deals are transformational.
But the financial mechanics are wild. AMD is giving Meta warrants to buy up to 10% of AMD's equity at just 1 cent per share. A penny. How does that make sense?
It sounds crazy in a vacuum. But if you read Lisa Su's rationale, she calls these very special instruments for transformational partnerships. It's about aligning incentives.
Because of the software moat we talked about earlier.
Exactly. AMD's biggest hurdle is their software stack, ROCm. Meta has an army of the world's best software engineers. By tying this equity to deployment, AMD is essentially buying market share and guaranteeing that Meta is financially incentivized to optimize AMD's software stack. They are directly attacking NVIDIA's CUDA moat.
So they're paying Meta in equity to build the bridge away from NVIDIA.
Spot on.
So for you listening, thinking about these two giants, it naturally leads to the ultimate question. Which stock is actually the better value right now?
Well, the analysts are completely split on that.
Let's look at the clash over PE ratios. Motley Fool argues AMD is highly expensive, pointing out a trailing PE ratio of 101 compared to NVIDIA's 53.
Looking backward, yes, AMD looks incredibly overpriced. But Zacks and Trading News highlight forward-looking metrics. AMD's forward PE is around 30x to 35x.
Which changes the picture entirely.
Does. Their forward PEG ratio is actually 55% below the sector median, while NVIDIA's forward PE is around 40x. So it depends on whether you look in the rearview mirror or out the windshield.
And that leads to this AI gold rush paradox. AMD recently beat their Q1 guidance by a colossal $430 million, guiding for $9.8 billion. And what did the stock do? It fell 5%. How does that happen?
It's all about expectations versus reality. In the AI space right now, very strong results are being unfairly measured against NVIDIA's extraordinary results.
Investors want instant gratification.
They want massive operating margin expansion today. But AMD's operating leverage is growing only modestly because they are pouring money into heavy R&D and go-to-market investments.
To support those mega deals with Meta and OpenAI.
Exactly. Yeah. Still, AMD maintains a highly ambitious target of a 35% compound annual growth rate and over $20 in earnings per share over the next 3 to 5 years. If they pull that off, today's valuation is a bargain.
It's a high-stakes game, but the financial markets don't exist in a vacuum. There are massive external forces at play here.
Right. If we connect this to the bigger picture, we have to talk about geopolitics and energy.
Let's bring in the insights from the AI Matters Journal regarding global regulation. Now, I want to be incredibly clear to you listening. We are merely conveying the original sources reporting on this shift here. We aren't taking any political sides. The journal notes a major shift in U.S. policy, specifically that President Trump overturned President Biden's 2023 executive order on AI. The source describes this as a shift toward deregulation and rapid innovation.
And they heavily contrast that with the EU AI Act, which takes a much more stringent risk-based oversight approach. Companies have to conduct extensive testing and publish transparency info.
Which fragments the global market.
It does. But the geopolitical tension is also hitting hardware exports. Look at the China revenue hit.
Right, the export restrictions.
AMD secured $390 million in non-recurring China GPU sales from their MI308 chips in Q4. But they are only forecasting $100 million for Q1 2026.
And they refuse to forecast beyond that.
Exactly. Calling it a highly dynamic situation, that's a massive blind spot for investors.
And beyond the geopolitical map, there is the environmental toll. We talked about those 6 gigawatt deals. Let's ground that with data from the ACM report. Currently, data centers account for 4.4% of U.S. energy demand.
And that is projected to triple by 2028.
Right. To make it relatable, a single prompt into Google's Gemini uses zero point 0.26 milliliters of water and emits zero point 0.03 grams of CO2.
Scale that across trillions of queries. The environmental strain is immense, and it leads to serious infrastructural fragility.
What happens when the grid can't handle it?
We've already seen glimpses. The sources cite a recent AWS outage that took down everything from PayPal to smart beds. It highlighted just how fragile our infrastructure is when we rely on a few massive hyperscalers.
So what does this all mean? To summarize the dynamic for you, it's a battle of titans. AMD is using aggressive, vertically integrated partnerships and stock warrants to chip away at NVIDIA's 92% market share.
While NVIDIA relies on an incredibly sticky software ecosystem and massive R&D to maintain its 75% gross margins.
And here's a final thought for you to mull over. With companies signing hardware deals measured not in millions of dollars but in gigawatts of power, perhaps the ultimate winner of the AMD versus NVIDIA war won't be decided by who builds the fastest chip or the best software. Perhaps the true victor will be whichever company can figure out how to keep the world's power grids from buckling under the insatiable energy demands of artificial intelligence. Thank you so much for joining us on this custom-tailored deep dive. Keep questioning the world around you.